Hey, Ivan from the EV Stock Channel here, and today we're comparing Tesla to other auto manufacturers like Ford, GM, Toyota, and VW, looking at deliveries, financials, and how each of these companies are being affected by various supply chain challenges like the chip shortage. But before we begin, thank you to all the Patreons that support the show, and as always, none of this content is financial advice, and while I try my best, I cannot guarantee the accuracy of the data used in this video. So let's get into some charts. Starting with sales, and over the last 4 years, Tesla has grown sales by an average of 64% per year, which is unheard of in the auto industry. However, when we switch to legacy auto, Ford and GM have both experienced sales declines by about 10% annually over the last 4 years, while Volkswagen and Toyota have been up and down, but generally more steady. When we look at quarterly deliveries, Tesla has achieved 5 consecutive record quarters for deliveries, showing no slowdown, even as Tesla battle chip shortages like everyone else. Meanwhile, here are quarterly sales in the United States showing Ford, GM, and Toyota. Just note, I have not been able to find quarterly global sales numbers, so that's why I'm using United States data. And we can see they all suffered declines in Q3 due to the chip shortage, and even temporary factory closures.
And we're back with more breaking news, this time about a major American automaker stopping down production as car prices are already sky high. Tom Costello joins us now. And Tom, at the core of this, these automakers say they are low on computer chips critical to make these cars.
Yeah, Tom, good evening. General Motors temporarily shutting down most of its North American plant operations this month because of that worldwide computer chip shortage. We're told SUV and truck models most likely will be affected by all of this. GM following similar announcements from Ford, Nissan, and Toyota.
Next up, let's put these 5 manufacturers side by side looking at sales. And I can see why some short sellers may look at this chart and wonder how in the world Tesla can be worth more than all these other companies in this list combined. First of all, keep in mind, Tesla's goal is to produce 20 million vehicles per year by 2030, and if they come anywhere close to accomplishing that feat, that would also mean that they would be taking away sales that would have otherwise gone to some of these legacy auto companies. On the flip side, here's how the 5 compare when looking at sales growth and decline over the last 4 years, and this is where Tesla is in a league of its own. And this is where time is on Tesla's side, because if Tesla can continue to grow at around 50% sales per year, it's only a matter of time before they can become the highest volume auto manufacturer in the world. In the final slide for sales, we examine Q3 2020 to Q3 of 2021. Note, for Tesla, I am using global sales, while for Ford, GM, and Toyota, I am using sales from the United States, as these are the only official numbers I've been able to come across thus far. But regardless, the numbers still give us an interesting insight of how these companies compare. Tesla's global sales are up 73.5% from Q3 last year. Ford and GM are both down significantly, while Toyota are up 17%. And note, even though Toyota is up from Q3 of 2020, they are still down significantly from Q2 of this year. So why is Toyota faring better during the chip shortages? Some say it's because they are just going full steam ahead with combustion engines, and those vehicles require less chips. But I'm not sure how much weight that argument has, as the other legacy automakers are still not making high volumes of EVs. Anyways, going forward, I'm going to keep on tracking the sales numbers once Q4 numbers are released, so stay tuned for that. So in summary, Tesla has weathered the chip shortage the best, while legacy auto has been pretty hard hit. However, let's see what happens in Q4. Next, let's compare revenue. Tesla has been growing revenue at around 48% on average over the last 4 years, which interestingly has matched their goal of growing deliveries by 50%. Meanwhile, Ford and GM have averaged revenue declines of around 4% annually over the last 4 years. Volkswagen has been steady, while Toyota has shown consistent revenue growth of around 4% annually over the last 4 years. Moving on, Let's compare all 5 companies on one chart, and again, while it looks like Tesla is generating about a fraction of the revenue compared to that of legacy auto companies, keep in mind, Tesla will come close to generating $50 billion in revenue in 2021 and maybe $75 billion in 2022, and if revenue continues to grow at around 50%, then Tesla could be at the same levels as GM and Ford in 2023. But just like Deliveries, when comparing growth rates on one chart, Tesla is by far leading the way, while legacy auto is averaging a few percent up or down over the last few years. In the final slide covering revenue, let's compare Q3 of 2020 to Q3 of 21, and again, Tesla is in a league of its own, with their revenue up 55% over the same time the previous year. Toyota was up 7.8%, while Ford was down 5%, VW down 9.5%, and General Motors down a whopping 24.2%. But the big question now is, will legacy auto be able to recover in Q4? And again, a lot of that's going to be determined by the chip shortage and how much progress they've been able to make on their supply chain issues. So in summary, when it comes to revenue, Ford, GM and VW have all taken a hit in Q3 of 2021, while Tesla has been able to continue their growth, and with Giga Berlin and Giga Texas factories opening in the near future, 2022 should be another strong year of growth for Tesla. Let's now move on to net income. Starting off with Tesla, and 2020 was the first year that Tesla was profitable for a full calendar year, and when we look at the quarterly numbers, we can see that the profit numbers have been increasing at a substantial pace over the last few quarters. Legacy Auto has been quite similar in that net income was down or even negative in Q1 and Q2 of 2020 during the height of the pandemic. However, the Big Four were all back to profitability in their latest quarter, but still off their highs. Again, chip shortages are being blamed for operating profit hits of up to 1 to 2.5 billion in 2021 for both Ford and GM, as per this image from Yahoo Finance. Let's again compare all 5 companies on one chart, and when we do, Toyota is clearly leading the way, making 17 to 22 billion per year in net profit, followed by VW. If Tesla wants to be the most profitable manufacturer, then Toyota is the one to beat. And keep in mind, net income will not just be determined by volume of sales, it'll also be determined by profit margins, where Tesla's making excellent progress. Not to mention, Tesla's ramping up their energy business. Now in the final slide covering net income, we're again going to compare Q3 of 2020 to Q3 of 2021. And when we make this comparison, there are some very interesting observations. One, Tesla is not that far from legacy auto in terms of profit when we look at Q3 of 2021, only 0.2 billion behind Ford and 0.8 billion behind GM, and they generated half of the net income that VW did. And take note of this, as look how far Tesla was behind in 2019 and 2020, and now they have almost caught up. Secondly, compared to Q3 of 2020, Tesla has had the largest profit increase compared to these other 4 companies, up 1.3 billion from this time last year. So if we look back, sure, it looks like Tesla is way behind in terms of profits, but if we look at their latest quarter compared to that of other legacy auto manufacturers, coupled with how fast Tesla's profits are growing over the last few quarters, and it becomes pretty clear it's going to be an interesting time for Tesla over the next few years, especially as Giga Berlin and Giga Texas come online. So in summary, we have looked at sales, revenue and net income, and I feel I'm only scratching the surface. Going forward, I'm going to expand this series to include more auto manufacturers and even some Chinese ones. And on top of that, also include other metrics such as profit margins, breakdowns on the percentage of EVs each of the legacy auto manufacturers are making compared to ICE vehicles. Cash on hand is another metric that we're going to have to look into. and also debt levels, so we can get a more accurate snapshot of the state of the auto industry and the trends that are developing within it. So stay tuned for the next auto industry recap, which will show a comparison of Q4 and 2021 data as a whole. Also, for those interested in the Rise of Tesla documentary series, more episodes are going to be released soon, covering the years 2020 and 2021. So until next time, have a great day.